Hey, everybody. Welcome to another episode of the Under the Hood podcast hosted by Stallion Capital. This is your co-host, Tim Douglas. And today on the show, we have Mike Alves, who is the founder of Vida Private Wealth. Mike, how you doing?
Very good. Thank you, Tim, for the invitation.
Of course, Mike. Thanks for coming on. And we're excited to hear about you and your firm. And we always like to start with your story. So if you could go tell us a little bit more about yourself, what got you into the financial space and how has it been going for you since, that'd be great.
Oof, yeah, that was actually a good one. I think unlike most people, I was fortunate enough when I was 14 years old in the seminary in Portugal. I actually ordered online. I mean, not online. It was not a mail order. There was not internet at the time. The book "What They Don't Teach You at Harvard Business School" by Mark McCormack. And from that point on, I really decided that finance was going to be it. And then, of course, watched the movie Wall Street right after that, and I wanted to be the good guy. So my career was designed pretty much from high school to college. And a week after I graduated from college, I was working for a big brokerage wirehouse. So I didn't waste any time. I knew exactly what I wanted to do.
I gotcha. And you said that was when you were 14 in seminary?
That's right. Yeah, I was in priesthood and changed my mind. That book literally did a 180 and changed my entire life at age 14, which was great because kids nowadays, even in college, they don't know exactly what they want to do and the purpose. But at that point, I decided I was going to switch, and here I am over 30 years later, and I'm doing exactly what I wanted to do.
There we go. And how did you find that book again? Did you just buy it? Was it sent to you? I think I skipped over that part.
There was no online. The internet did not exist, so it was a mail. You would receive those catalogs in the mail to buy books, and I picked that one. I found it really interesting. I read it several times, but after I read it, I felt compelled that I wanted to be in the business finance world. And then what really drove me, obviously, or decided to be in this industry, wealth management, was after watching that movie Wall Street with Michael Douglas and Charlie Sheen.
Yeah. Yeah. And you said something interesting there. You said you wanted to be the good guy. So talk to us a little bit about that, because I noticed titles at your firm. You have somebody who is the chief happiness officer. So it seems like a theme in your life. Talk to us a bit about that.
Yeah, I mean, it's a whole environment, it's a whole lifestyle, actually. So that's a good point. Life planning. I mastered in advanced financial planning, but with the minor in life planning. And what that is essentially, encompasses the whole lifestyle of aligning your wealth with your values to live a more purposeful life, more meaningful life. So, of course, titles is just, a lot of people say it's funny, but the interesting thing is everything that you do, everything you say is related or interrelated to who you are. So I'm a big believer in that. So the titles is just one, but what we do, how we treat our clients, how we talk to our clients, how we communicate is always to improve, to do better, but also to align the values, whether it's our values or their values, with the resources to live a more meaningful life. So I'm not sure if that makes more sense, but it's essentially following what you truly believe in.
So curious, do you ever turn down a client because they're not a good values fit, or maybe they're trying to get you to do something that doesn't align with you?
Good question. In fact, not only did we turn down clients, I actually fired 2 clients in 18 years, only 2, but because they did not fit. So I do a much better job selecting and, like you said, turning down clients or potential clients if there's not a fit.
Mm. And is that fit primarily based on impact? Is it based on values alignment? Like, how are you a better picker now than you were when you started?
Well, the selection process is essentially personality, values, and it doesn't have to be where the potential client has to have the same values as we do, but there's got to be an alignment. Someone who is narcissistic, someone who is only concerned about material possessions, or someone who is just focused on selfish well-being, doesn't care for others, doesn't care for the community, that's not going to be a good match for us. We want someone who, and I say normally, if you're trying to skim on taxes, you're probably not going to be a good client for us. Of course, we help clients minimize their tax burden. In fact, that's probably where we spend close to 50% of our time is tax strategies with the help of their tax advisors, of course. But we don't want to cheat, the government, if you will. So everyone pays their own fair share. And that's just an example. I mean, it goes from that to personally not being a good parent, for example. I could give you several examples of we fired a client for different reasons, but the fact that they were not the relationships with their family members or siblings was not, in my opinion, something that we align with our values. And so it's not like we're cherry picking on details or values that do not match our own, but in general.
Yeah, it has to be a pretty big gap between what they're doing and kind of where you align. Like, I would assume if somebody is doing something that is just morally wrong when it comes to their family, whether it be abusive, verbally, physically, like that's when the line is kind of drawn. But you're not like traditions and preferences. That's not where you're nitpicking. It's more like, are you treating humans correctly or are you not, is more the issue.
Exactly.
Okay. I got you. And tell us a bit more about kind of where you go to stay up to date with the latest market trends and financial strategies. I know before we got on the show, you were talking about the type of clients that you go with. They tend to be higher net worth. So I'm curious, we've had advisors on who are, more the everyday clients, and then other advisors higher net worth, some right in the middle. They all kind of have similar sources, but they'll focus on different. So I'm just curious to hear your answer of where you're going to stay up to date with latest market trends, financial strategies, and the kind of information you're taking to your clients to make decisions.
Well, we have several associations, organizations that we are partnering with or members of. So family offices that we collaborate as well. So we receive a lot of information communications, whether it's email, newsletters, phone calls, webinars that we have from them. So those are the trends, because we focus on high net worth and ultra high net worth families. We have to stay within that market and what appeases those families. And as you mentioned, investments will be catered specifically to accredited and qualified investors. So you have to be in that realm, and you have to be up to par. And yes, I mean, still read the Wall Street Journal, Market Watch, and there's a few others that I don't see or look at them every day. But of course, I read them also because some of our clients will ask questions about, I saw this, or a friend of mine told me about this article on Wall Street Journal, for example. And so, yes, I'll take a look at that. But where we focus more is the trends that our client base is focused on, the family offices, multifamily offices. So other I guess, competitors, if you will. I mean, I see them as collaborators and partners in the industry. So we network together, and we have webinars and we have calls with each other. In fact, I had just had a potential partner reach out, a member of another organization that I belong to, reached out and talking about how we can collaborate on the next gen, because that's what their focus is on, these families that have at least 30 million plus in net worth. The next gen, which again is one of the things that we do for our clients. So our clients, we have the clients' kids and then the grandkids, and they focus on the kids and the grandkids of these ultra high net worth families.
Okay. And so elaborate a bit more on next gen. Like, are these courses? Are they one-on-ones with the kids and the grandkids? What does that program look like, and how are you really helping these kids out?
It's a combination. So we have, we do pro bono work. So that's normally a group class, for underserved communities, normally high school or college. But our program is age-based. We have 5 age brackets from age 5 to age, 30. And there's different classes, and even the timing of those classes and the duration of those classes are different, because someone who is 5 to 10 years does not have the same attention span or maturity to learn something that, for example, an 18-year-old has. So the classes will be different based on age. We have approximately 40 classes. They can be one-on-one. They can be also custom, specifically or especially if they're clients and they have something. For example, we had a client recently who the daughter turned 21 and she's becoming a successor trustee on their trust. We had to create a class custom for her to explain what a fiduciary is and how a trustee, what are the duties of the trustee, so she understands what she needs to do in this specific trust for their parents. So for clients, we will do custom classes, but for someone who's not a client, we can do an individual or a group. For example, if you have a son or daughter who's 12 years old and they have a couple of classmates, they want to jump on a call about how to open your first bank account or how to manage credit cards or the value of money. We have money personality assessments as well, which is one of the kids' favorite, is to understand, okay, what type of person I am when it comes to money. And then, of course, it's not a one and done, it's a process. And with the help of the parents, we're able to guide that individual, depending on where they are, to assess where they are. Because, again, some of them are knowledgeable because they have a little bit of financial management, and which is rare, but some of them actually do, like my son, who already learned compound interest in 7th grade. But a lot of kids don't have that luxury, don't have that. So we teach them compound interest if they are mature enough to understand it. Otherwise, we'll start with something as basic as value of money, chores, basic, essentially.
The basics. I gotcha. That's really cool. And so if somebody is not a client of yours, but they want their kids to go through this next gen, sometimes you're going into underserved communities, but they can contact you and it's a virtual thing, or do they have to fly out?
No, virtual. Most of it is virtual. We will do in person. Most of the time, the in person are our clients, where we already have a meeting scheduled. It's an annual family meeting, and normally it's a whole weekend, and we go for a few hours or half a day to do the classes. But also, I will go because I'm their advisor to discuss with, the CPA or the attorney about a business they're thinking about purchasing or whatever, estate planning or whatever the item is that they need to discuss. But yes, Next Gen Financial Education Program is incorporated in those family meetings, annual family meetings.
Okay, very cool. Now I want to jump from next gen into kind of current market insights. And so when you're working with ultra high net worth people and high net worth people, what are the key factors to pay attention to in today's market to keep them informed and to make sure that their plan is working how they want it to?
Well, first of all, we have to make sure that it's aligned with their values, right? So everything starts with values. One of our initial conversations is values assessment, is to understand, okay, what is it that they want to do with their money? What are their values, and how are we going to align the money, the resource that they have, with those values? If there's investments that we see are congruent and aligned with those values, then of course we will approach the client and we'll let them know this is an opportunity for us. And then we also have to monitor that on an annual basis if there's any changes on the investment, not so much on the plan. Normally the values, the client values, do not change. It's essentially the portfolio. If there's any changes or new opportunities that show up, so we will present that to the client. I can give you several examples, but like one of them is the client really wants to invest in something that is good for the community, like sustainability, for example. But they're also a big believer in technology, and of course they want profit. So something like, for example, SpaceX would fit that. And then they look at it as, okay, what is the term, like how long and where to invest that? Now that's a whole different conversation, is where are we going to have that investment in, what portfolio or what account are we going to invest those funds? But essentially it is aligned. And so, yeah, we have to be up to, I think you asked also the question about the trends. So the trend nowadays seems to be AI and technology. Among others, it seems like cryptocurrency is coming back too, but AI seems to be, in fact, a lot of people are saying that 10 years from now, we're going to be in a whole complete different world because of AI. And I do believe in that. So the humanoids, robotics, that's something that we're looking at on a daily basis, essentially, because it's moving so fast. So to your point, yes, I have to read, I have to be constantly looking for and receiving information and resources about those items that interest our families, our client families.
That is super interesting because a lot of times, we'll have people come on the show and they'll say interest rates. Like that'll be the first thing that kind of pops into their head. How the interest rate spike, how that has affected client portfolios. And you're like, first we start with values, and then we're looking at a lot of the innovation because, sometimes high net worth clients can be have their portfolios concentrated, or not concentrated, but put into some private investments or some innovative stocks where that AI, that tech sector will really impact their portfolio. So it's just a different, instead of a, 60-40 stocks, bonds, diversified mutual fund, you're looking at um, investments that are much more impacted by the innovation sector as opposed to interest rates. So that's the thing you brought up, which was really interesting. I was hoping that it would be like that, and it was. So I'm glad that it was.
Well, I don't know if this makes sense, but when you're talking to someone who has more money that they will spend in their lifetime, so multi-generational wealth, and this is why we're looking at these very long-term, business opportunities, investment opportunities, because I think you're right. I mean, for someone who maybe does not have enough or barely has enough, for their lifestyle in their lifetime, then income is very important. Of course, you have to be more accurate and you have to be looking at investments where maybe more conservative. And yes, interest rates will affect municipal bonds. And not to say that we don't have those. In fact, most of our clients have municipal bonds because of the taxation or the exemption on taxation of those bonds. So it makes sense for high net worth clients that are in a high tax bracket. However, that is minimal because it will cover, the basic lifestyle. But then we have this money, the legacy money, which is multi-generational. And this is where we differentiate ourselves from other, wealth management firms or RIAs is we try to ensure multi-generational wealth that the clients want with their values, with their legacy towards the next generations. And Next Gen Financial Education Program is just one of them, to help create and build that education, prepare that next generation or next generations to receive that whatever income, assets, legacy from their parents.
Yeah. Yeah, no, absolutely. I love the change in focus and how dialed in you are on impacting your kind of ideal client, those high net worth families. And I'm curious, we mentioned AI and technology and innovation and how you're kind of keeping a daily, weekly pulse on it. You're pretty consistently getting information about it. And so what are you seeing in that industry? Not to make any projections here or anything, but just some of the aspects of that industry that you're keeping tabs on. Like, are you looking at how AI is going to affect jobs? Are you looking at maybe how it affects certain industries? Talk to me a bit about that.
Great question. I had recently a call with one of our largest clients, and their concern is how it's going to affect jobs. AI is going to affect jobs, meaning robotics, AI are going to, take away the jobs of our kids. Essentially, that's essentially their concern is what are kids going to do? So, of course, just like with any technology, any innovation, there's this mentality, and as humans, that's human behavior. It's nothing that we can do about it. But we are afraid or reject change and adaptation. We need to adapt to these changes, and I believe it's going to actually be better for us. It's going to be more efficient. It's going to make our lives better. And I think Elon Musk says this all the time, and I do agree. I mean, it's going to make us, of course, switch. Okay, and look into things perhaps that AI and technology cannot help. Perhaps art, I don't know, entertainment, and then there's a talk about universal income, which that's an option. Why not? I mean, so I think people will focus more on their purpose in life if they don't have to pay their bills, right? And a lot of people nowadays are really working just to pay their bills. It's not they're not following a purpose. They're just, and that's something that a robot could do. So that's why I believe it's going to make our lives better. Because there's a lot of people out there, they're, living paycheck to paycheck, paid by the hour, and they're doing it just because they need to pay rent and put food on the table. Now, if you can have someone do that, or something, a robot, a humanoid robot, do that for a fraction of the price, then why not? It's just like free markets. If you can buy a computer in Brazil at a cheaper price than you can make it in the US, why not? No, now we need to focus on what we do better, our unique skills, right? And this is, I think, where we're going to switch in the future is we're going to look more at purpose, at our unique skills, our passions, and follow that. So I do think that 10 years from now, 10, 20 years from now, even, it's going to look completely different. We're going to have rockets instead of airplanes taking us within less than an hour from Hong Kong to London. I mean, it's just amazing what's coming here. And the AI, of course. My kids use Alexa every day for homework, just to give you an example. Things that never existed. And I'm trying to explain to my kids that when I went to school, middle school, we didn't even have a flip phone, no cell phone. There was nothing. And now they can't even imagine living without this little thing that they carry in the pocket nowadays. So if this is what happened in the last 20, 30 years, imagine what's going to happen in the next 10 to 20 years with all the advancement in technology and AI.
This is completely selfish question, a little tangential here, but what are your thoughts on how it will impact some of those third world countries or people who are more living in poverty? Do you think it'll make some of the work people are trying to do in those countries, or just kind of even out the playing field a little bit? Or is that idealistic of me to ask that question?
No, that's great, and I wish more people asked that question, or at least looked into that, because you're right. This whole universal income, for example, where you have a base income for everyone, and I think this should be global, of course. But for those countries, I don't know if you're aware of Starlink. Now anyone in the world, it doesn't matter where you are, top of a mountain, rural area, Starlink, which is by SpaceX, the satellite wireless communications. You can be on a boat in the middle of the ocean. You can be anywhere in the world, and you have access. What does this do? Because of the internet nowadays, anyone in an underserved community could sell something or create a business out of nothing, essentially, as long as you have access to internet. Because access to internet, as you know, is access to the world. You can meet someone in South Africa or East India or anywhere, and anywhere in the world where it is remote. And if you have access to the internet and you have a phone or a computer, you could sell, I don't know, goat cheese, alpaca, made. I just went to Peru the other day, and these amazing clothing that they make out of baby alpaca and alpaca. It's amazing, that you could sell this all over the world, right? But we don't know about it, right? So if you have access to the internet, because they live in these rural areas where internet access is scarce, it's difficult. But if you do have access to the world via the internet, and this is accomplished with technologies such as Starlink. This is just an example, obviously. Robots will come, and there's going to be a lot more other things that are coming. Sustainability, I think the world is going to be better. We're moving into electrification, not just cars, battery storage, solar power. I mean, all of this that is coming, it's just amazing. The advancements in medicine, what Neuralink, for example, is doing. People that are helping people have vision, blind people have vision, and so on and so forth. I mean, there's so many advancements. It's hard to actually keep up with it, but it's something that we need to do for our clients, is try to keep up with all the advancements in technology and medicine, AI nowadays, because that's where the world is going. This is where the future is essentially here.
Yeah, no, absolutely. And I do want to jump a little bit to portfolio construction. So you're working with a lot of high net worth families. How are you? Is there kind of a portion of their net worth that's like, hey, this is going to be income, this is for lifestyle, and the rest we're going to do high growth? Or how are you breaking up that amount of money for that family? Because you're doing the generational planning and they also have their daily needs.
Good question. So I call it buckets, right? We have a bucket for the lifestyle, which covers pretty much all the life. So that's a little bit more conservative, where you do have income. We will have things like real estate and private equity. I'm sorry, fixed income like municipal bonds. The multi-generational wealth, the legacy, that bucket, that the money that they know for sure they're not going to need in their lifetime. Sorry, they will invest in more growth-oriented items, such as private equity, for example. So something that is more aggressive, and that's where things like companies like OpenAI or SpaceX and other companies. I mean, there's several. I'm actually drawing a blank now. We just invested in several in the last year, technology companies and AI. There's sometimes we have opportunities to invest in public to private as well, like the Twitter when or now X was one of them.
Oh, wow.
But yeah, so that is more. Those are opportunities much longer term, because that's pre-IPO, and the client knows that they'll probably not touch that bucket for the next 10, maybe even 20 years. So they don't need that for income. They don't need that, and again, in their lifetime.
Yeah, I gotcha. That makes a lot of sense. And so, conservative bucket for lifestyle. It's a portion of the portfolio, whatever. I assume it's whatever they kind of say they want their lifestyle to be. Like if they want to live off 100,000 a year, it's like, okay, then we'll take that amount and the rest will be in growth. If you want to live off 500,000 million, whatever your kind of preference is, I would assume, get that down when you're doing the kind of values audit in the beginning as well. And then the rest, growth oriented private equity. And so when you're finding these private offerings, we love to have a section of the show dedicated to alts. So let's go ahead and jump right in. What are you doing to really source these opportunities? And then how do you evaluate them? Like what's your first level of screening, second level of screening, all the way to investment?
So we already have some partners that we worked with or have been working with for quite some time, but I get offers on a daily basis, and I believe it's part of the networking on, the webinars that we attend, also the networking events that we go to, but also LinkedIn, social media. I guess people just, when they Google us, they find our website. So our general email box gets a lot of these offers a day. So, I like to go with tenure, of course, funds that have been or are known, because our clients don't tend to not want to go with unknown firms or managers, fund managers. But sometimes, once in a while, there's something that is very interesting that pops up, and then so we have to do due diligence, and that's where it takes a little bit longer. The reason why we also don't like to work with newcomers, unfortunately, it's and I understand, because as a new firm, we're the new kids on the block essentially. It's also the same thing where, okay, we don't know you, you haven't been in business for a long time, and you just started managing this fund. Okay, so we have to do a lot of questions, due diligence. But yeah, the process goes. We look at funds they're managing, their clients, tenure, the strategy that they're looking for. Because the worst thing that you can do, I believe, one of the worst things that you can do is you change your strategy. As a fund manager, if you're investing in, I don't know, let's say real estate credit, and then you switch just because the interest rate market or the interest rate environment switch. And I understand, the reason why. It's just that the client is expecting one thing, right? And we are investing in for one purpose, and then that switches, that changes, and it goes into more income based, for example, and that it changes the portfolio as well for us. So now we have to switch. We have to change our portfolio, because that fund manager decided to change this strategy on the fund.
So that is so interesting. What is really important there with that track record, with how long you've been in business, and the reason you like the more known guys is because they're more likely to give you that consistent experience and not have you recreate your plan when you weren't planning to.
Right.
Man, that is very insightful.
It's just one of the. It's just one example. I mean, there's others, but that's one.
Yeah, no, absolutely. Absolutely. And so when you're looking at these alts, you're looking at tenure, kind of fund manager. Can you trust them? But I would assume a lot of them, like you said, you have partners that you work with. These are kind of your recommended that you allocate to. And then I'm sure referrals come your way from all the other kind of multifamily offices that you network with, and the conferences and the webinars and stuff. Is that right?
Yes, true. Like, for example, we have other multifamily offices where sometimes they have an allocation to a deal that it's too much for them, right? They don't have enough. And so they come to us, they say, we were just offered some shares of some of our LPs want to sell for liquidity purposes. They want to sell some of their, for example, SpaceX, OpenAI, or or Figure. Like that's one. It's been recently on the news. Figure, which is as you know, humanoid robotic company by billionaire. So that's the type where we will sometimes get an allocation and say, hey, we have $10 million that that extra allocated, and happy to give you some of that if you like. So we will get those opportunities. But and this is to your point, we prefer those deals where we're directly investing in the company instead of a fund of funds, if that makes sense, because the fund of funds, a lot of things could change, a lot of things, and you also are buying perhaps into companies that the clients do not want to invest, because you have not just one, but you have tens, dozens of companies that you're investing in a fund of funds. Whereas if I want to invest $1 million in SpaceX or a couple of $1 million in OpenAI or a Figure, then you do that, and you know exactly where your money is, and you follow that company, and or try to know as much as you can. But when it's a fund of funds, you have several companies, and they will increase or decrease the allocation to each one depending on how the manager feels, and we don't have much control over that, unfortunately.
And so when you go to the private markets, are you primarily looking for growth opportunities, or are there some private investments that you also depend on for that kind of income portion in the more lifestyle bucket, if you will?
So mostly growth, mostly growth. But once in a while, we had an Amazon Fresh deal that was pretty good a couple of years ago, and it had a 1031 option as well. I believe it was, if I remember correctly, 9% dividend with an 18% IRR. There was also I forget the name now. The LeBron James actually was one of the investors here at the Santa Monica Park Place, I think it's the name. That was another income opportunity that we had. So once in a while, we'll have some income opportunities in the private market. And again, client prefers the individual deal, not a fund of funds. And sometimes we'll invest in it. So, but yes, to your question, the private equity is more for growth, long term.
More for growth. And then the lifestyle is that kind of some stocks, some bonds, and am I missing anything there? Just
muni bonds, treasury bills, depending on, like you said earlier, I think we started the call with interest rates or something. So yes, we of course are aware of interest rates, and we know, in fact, we were lucky last year. We invested a lot in municipal bonds where we could get 5% tax exempt, and that's obviously very difficult to achieve now today. And this was just 3 months ago, and we're still looking. I don't know. I don't think that we're going to have the same opportunity we had last year. But to your point, we took the opportunity. We talked to the clients about, hey, we don't know how long this is going to last, but anytime muni bonds are paying 5%, which is above average. I learned this early in my career. Anything that's paying above average, you want to take it. Tax exempt municipal bonds, the average historic over the last 100 years is about 4%. Inflation is about 3%. So corporate bonds is 5%. Right, taxable, and then stocks, of course, is about 10-ish, right? So if we're getting 5% tax exempt on municipal bonds, which is 1% above average, then you want to definitely start increasing your allocation to that. And this is what we did. Now you're getting a little bit over 4%, so it's still good, but it's not 5%, right? So it's not what we were getting last year. So to your point, yes, we have to be aware of that, and clients are happy because, as you know, rates came down a little bit in the last couple of months. And so the value of those bonds that we purchased last year have already increased substantially for a municipal bond.
Yeah, no, absolutely. Okay, so we've talked about the role of alts in a portfolio, what you do to look at alts. We also talked about the buckets of how you allocate high net worth clients and the factors of the market you really pay attention to, in that, it's more on the tech side, on the innovation side, because that's what's really affecting these portfolios. And the interest rates don't have as much an impact on them because they have their lifestyle money and then they have their generational wealth money. So I feel like we've kind of covered the gamut of how you like to construct portfolios, how you look at alts, how you look at the current market. But do you think there's anything else we need to touch on in there that we missed?
There are other things, but I'm not sure if your audience. So for example, life insurance is for estate taxes is something that we look at, and for our type of clients, because of their risk appetite, we're looking at variable policies normally. So it's also something where you have to be careful with your portfolio. So I see that as an investment, even though we're not looking at alts, private equity in those. You still have to be or have an aggressive mindset when it comes to investing in those, because they're long-term as well, and these are large policies. The other thing is, we have not mentioned, and this is probably a smaller part of our business, the 401k group retirement plans. But unfortunately, there's not much we can do, because when you have a 401k plan or a group plan, a profit sharing plan, or a pension plan, even cash balance plan, those you cannot invest in all the funds that you would like, because it depends on the record keeper. Now, we do have some pool plans for our clients high net worth clients where they have a smaller business, but they have very high income. And that we can do for them. We can invest in essentially pretty much anything inside that to a certain extent, of course, because they're trustees still of their employees or the plans, which responsible and fiduciary for the employees' money as well. But we have a little bit more leeway, if you will, in those plans. But anyway, so I diverge a little bit of your question. But so because those are two of different non-average accounts, I wanted to mention it just because we also have to manage those portfolios according to specifically what the client needs. In this case, retirement for the firm, because a lot of them, they have family businesses. And I was going to say actually close to 100% have or created their wealth from a family business. So they have profit sharing plans, cash balance plans, pension plans, and all that. And then also the life insurance policies, which we have to manage, we have to invest as well.
Okay. And so with the pension plan, you said they're a fiduciary to their employees, but they're investing that on behalf of their employees, or you guys would be investing that on behalf of their employees and giving that return to their employees. And then do they take some of the extra delta, or like, how does that benefit your client specifically?
So the way it works is essentially the client is responsible because they're the trustee on their pension plan, profit sharing plan, 401k. They're the trustee, but they hire us to help them fulfill the fiduciary duty that they have, right? Not just us, of course. There's others. I won't go into because I don't want to spend all day here. But so we are just one of and we helped invest the portfolio, and so we advise them. But they are the ultimate responsible. They have the last word. They could say, "No, I don't want to invest in, let's say, Tesla in my pension plan." Okay, profit sharing plan, that's fine. But they have the capability of saying, if for example, we say you should invest. You should add private equity, or you should invest in these companies that are super aggressive. They have the option to say no, because we don't have discretion on those retirement plans. So maybe I should have clarified that. Whereas we do have discretion on all other accounts, we don't have discretion on retirement accounts because they are under ERISA. So regulators, we are not. So we're still fiduciaries as an RIA, but we follow orders from the client. But of course, the client is expecting us to give them advice and tell them what to invest in, and then they approve or will, reply and say, yes, I like this, and that, but I don't like this specific security, or I think that's too risky. We remind them all the time, you're fiduciary, you're a trustee on your plan, so it's ultimately your responsibility. So, but we will try to give our advice, our financial advice, appropriate to your plan, and of course with the employees, because we know normally we know the family, but also the employees at the family business, depending on how large it is too.
Okay, and then the variable life insurance policies are primarily for estate planning. Did I hear you right when you said that?
Primarily, yes.
Okay. Gotcha. Well, now we're going to jump into the last section of the show, and we just want to hear more about you guys. I feel like it's become very clear, but if you want to add anything to how people can really tell you guys apart, now would be the time to do it. In my head right now, it's you only serve ultra high net worth clients, and you also have the next gen, and you're kind of values based. You lead with values. Those are the three things in my mind right now.
I couldn't have said it better, I guess. So financial life planning, which is the values based. Yes, that's our process. And there's a process to that. And that's, I guess, part of the selection process when we have those meetings initially to figure out what the values are, the personalities, assessing if we're a good fit for each other, because it is a long-term relationship. It's almost like getting married. We don't take on the clients for a year or two. We take on clients for life, essentially. So that is very important. And we take our time, and clients enjoy that. And then, of course, the Next Gen Financial Education Program, that is, in my opinion, very important. And one of the reasons why I started RIA, because I don't know if I mentioned this previously, but I worked my entire career, most of my career for Merrill Lynch. And I decided to leave about 5 years ago and start my own RIA because I was not allowed to do this financial life planning and also Next Gen Education Financial Program. So we created this program pretty much immediately once we opened up our doors, created the curriculum and started working on the marketing materials and all that. So even though we practiced this before, we didn't do it officially. Now we can do it and actually discuss it. So I believe these two services are what makes us different. Now, the focus on high net worth, ultra high net worth families, that just happened. It was pretty much part of because of my past, my experience working for a global wirehouse. I had experience and I enjoyed, and I actually increased the minimum once I started my RA because I felt like that's part of what I enjoyed. Not only what I enjoyed, what I wanted to focus on with those families, but also I felt I could make a bigger impact because money is a tool. Money is a resource. So the more you have of that resource, that tool, the more impact you can make. So if I can help a client make a positive impact in our community, the more you have of that resource, the more you can. So someone who doesn't have as much of that resource cannot make as much of a big impact. So, and again, I'm not saying I'm better or worse than anyone else. We're just different. We focus on that. That's our niche. That's what I feel I'm better. I got my master's degree in advanced financial planning for that reason as well, because I wanted to be knowledgeable and be able to help those families with complex estates and complex financial issues. And so I feel like we are a good match. Now, it doesn't mean that we cannot help someone who has a lower net worth. Again, we just decided that was our business model, and that's what who we're going to focus on, who we're going to help, those high net worth and ultra high net worth families.
Yeah. Yeah, no, I love the business model, and I'm so glad that you said money is a tool. I run in a lot of Christian circles, and it can often be said that like money is evil and money is this and money is that. I'm like, no, money can really, like, you wouldn't have a church building without money. So money could be a really great tool to impact people, and I'm glad that you're focused on that, and I'm glad that you have built your niche in that. And last question here, and then we'll kind of wrap this up. What is the most important part of an ideal client advisor relationship in your mind and with your clients specifically?
I want to say trust, and I know that's not something that happens overnight, but there has to be a connection, in my opinion, and there has to be trust, because when you have discretion over someone's entire financial resources, it can be scary. So you do have to trust someone that is giving you that advice, is making recommendations that could affect your life permanently. Making a bad investment. If it's a small part, I mean, understandably, it's a small a portion of your portfolio. But if it's your entire portfolio, then you do have to trust that person. So I want to say trust. You have to be able to really tell us who you are, and honestly who you are, not this facade that you want to pretend that you are someone different. It's really, if I can get to know you, Tim Douglas, who you are as a person, where you want to go, your desires, your goals, your values, I can better help you, and I can connect you with certain investments, not just certain investments. I mean, you name it. We help clients with referrals to travel agents, CPAs, estate attorneys, bankers. I mean, you name it, anyone that can improve their lives. But we need to know. And their kids too. So the entire family, not just the client itself, the couple, but the entire family and different generations. The reason why we have a next gen financial education program, that's just one of them. The reason why we joined their family meetings, their annual meetings, some of them actually have quarterly, but most of them it's just annual. We want to be part of that family. We want to be able to get that trust, not from just the matriarch and patriarch, but also the future generations. So we can better help them. We can better assist them achieve their goals. I find that, and we get this all the time, the parents will tell us, oh, this whole purpose thing, we already know our purpose. And that's fine, yes, because you're at an age where you already went through that. Maybe you already had a financial coach, a life coach, or a business coach, and they helped you with some of that purpose. Perhaps that's why you started your business or continued your family business. But then their kids, sometimes they're not sure. Do I want to be part of my family business? Do I want to start my own business? I don't want to be a doctor just because my dad wants me to be a doctor, or I don't want to be in the family business because my mom wants me to be the CEO because she thinks I'm the best person to be the CEO. The kids will have their own goals, and uncovering that purpose takes time, and they need help. And so that's where we come in. We bring the resources. So I mentioned several advisors, but like financial coaches, life coaches, business coaches, those are referrals. In fact, we just had a client ask for a referral for their daughter who is unsure what she wants to do. She's just graduated from college and she doesn't know what she wants to do. And they just sold their family business. So because initially this was actually unexpected. Initially, she was going to continue in the family business, but now they sold the business last year, and so there's no family business. What are you going to do? And the daughter, who just graduated from college, has no clue. And now she's going on this internship, this retreat for 4 months in New Zealand. And then when she comes back, they hope that. But again, we had this conversation about how a life coach can really help you hone on your skills and your purpose, and help you really focus on what you want to do for the rest of your life, or at least for the next 20 years or so. So I don't know if maybe I went too much, but I just wanted to give you a little bit more clarity of how we help our clients and what we do. It's not just all about money and portfolios. We really want to align their values with their wealth to live that purposeful life. And to do that, it requires a village. It's not just us. We have a lot of our advisory board, our partnerships with many of other advisors out there, and even other multifamily offices that we work together to help these families.
No, absolutely. Love what you're doing for the families. And I'm so glad that you came on the show, Mike. We appreciate it. It was a great one, man. Thanks. And
Thank you, Doug. Appreciate it.
if people want to know more about you, where should they go to contact you?
Well, you can email me, mike@vidapw.com, or you can check our website also, vidapw.com. So Vida, if you don't know this, stands for life in both Portuguese and Spanish. My parents are Portuguese, so and I actually speak both. But I love the word Vida because it sounds better than life. But that's essentially the meaning. So life, private wealth. So Vida Private Wealth or vidapw.com.
Okay, sounds good. Mike, thanks for coming on. Everybody, thank you for watching. All the ways to contact Mike will be down in the show notes, and we'll see everybody on the next one.